Hello everyone, this is Jeb Hamwiger from goldstocktrades.com. I wanted to give my readers an update on the markets today. It's Thursday, April 5th. It's around 3 p.m. and I wanted to look at the sectors that we closely follow. I know there's a lot of fear out there in the market right now, especially with the miners hitting new 52-week lows and testing actually 2-year lows. So this is 24-month lows for the gold miners that we're testing. So there's a lot of panic right now in the mining stocks. We're seeing a very overbought equity market. We're seeing a rebound in the dollar and treasuries as the euro crisis intensifies. The dollar and the treasuries hit the 200-day moving average and has bounced off of that. So the gold miners have significantly been underperforming relative strength-wise for a while now compared to other miners since the October bottom. Notice here the uranium miners have had a pattern of higher lows. The gold miners have had a pattern since October of lower lows. So that's maybe indicating the industrial metals are outperforming. Same way with rare earths. Although we're seeing lower lows in the gold miners, we're seeing higher lows in the rare earths. Is this telling us something? Also, we're seeing with gold and silver, they have still not violated the December 2011 tax loss selling lows. So even with all this panic and manipulation by central bankers at the end of February, saying that there'll be no more accommodative moves, or what was supposedly thought that there'll be no more, or supposedly reported that there'll be no more quantitative easing. Well, that hasn't been able to cause gold to hit new lows. So although we've seen new lows in the miners, in the major miners, we haven't seen new lows in gold and silver. We haven't seen new lows in uranium and rare earths. We haven't seen new lows in the silver miners. The silver miners are still above that low. And the gold miners, if you take a look at this declining trend line, it's hitting that lower level. So it's extremely oversold. Each time it's hit this level, we've seen very powerful bounces. We're at 2-year lows. We're the most oversold we've been since the 2008 credit crisis. The last time we were this oversold was back in 2009, and the miners had doubled over the next 18 months. So I think this is a time, although we're seeing new lows, and this may be a time to flee into the overbought equities, and some are quitting investing in miners or precious metals. I think that may be a knee-jerk reaction to recent news. The reality is, since October, we have seen massive liquidity measures, accommodative moves, Operation Twist, 1 trillion LTRO. And this has caused a major rally into the banks and to the home builders. And at the same time, we've seen the commodity markets, especially the venture, and the uranium and the rare earths and the gold miners have been really in a bottoming formation and still very oversold. We believe that there is going to be an eventual move, that investors are going to start being concerned about inflation, that the economic recovery will continue to need more stimulus, or else we're going to see declining equity markets and rising unemployment. So and crisis in the streets. So we think that the central bankers are QE is still on the table, and that they have been doing QE since October, and that they will be continuing to do QE to continue to prop up the equity markets. Eventually, this is going to move into the tangible assets, into the mining stocks, and into the uranium, the rare earths, the silver, and the gold miners, which are still bottoming, which are still oversold, and which we believe will move higher. So thank you and have a great day.